beat that next year, and where did I take stops, and how can I do less of that? So good time to go back over your trading blotters, your trading records, and see, I look over my Fidelity and my Interactive Brokers accounts, and I'll take a look over hundreds of trades. Where are the ones that made me the most money? Where are the ones that I took stops? What's the difference between the two? And use that as the start of a trading plan for next year coming up. So, hey, anyway, welcome aboard, everybody. Just wanted to wish you all here. Oh, good to hear it, Ahmed. Appreciate that. Saying great, webcam's good, right in the middle of the screen. Webcam's fine. Well, thanks. Hey, you're welcome, Rita. Saying same to you, Ken. Thanks for helping improving my trading. Yeah, good morning, Josephina. And Bob. And Ken. Hey, and Arturo, you too. Yeah, good to see our traders from around the world here this morning as we get underway. Wanted to thank all of you for being part of what I'm trying to accomplish here at Day Trading University with the number one, or one of the very top, I should say. I don't know that I'm the number one, but we got 2,500 registered for today, so not too shabby. Thanks for being part of it. We get underway here in just about 4 minutes. I want to help you see what the best of the charts are out there and how to trade them. So, for example, I'm long MGM. I was there for 9 days recently. I was telling all the staff there, all the people at the hotel, it was my number one pick, and it's my number one capital holding in my Fidelity SEP IRA, and you can see why, right? It's doubled this last year. But a quick candlestick quiz. Quick thing to get the juices flowing here before we get started this morning. What's a danger Will Robinson warning sign? I'm open long in MGM, and I scale up every couple of points, but I'm tightening in my trailing stop. I'm long in MGM in both my IB and Fidelity accounts, for example, but I'm tightening in a trailing stop. Who can tell me why? What's a good reason to sell MGM at the first sign of trouble here? Deeply and profoundly grateful to my colleague Steve Nissen for teaching me how to trade candles years ago. We've been working together for over 13 years now it's been, and what he teaches works, and so that's good. That helps me make money when I trade. But the trading decision is to do what? Where would you sell? Where would you sell if you're open swing? I'm curious. I got hundreds of traders here. Where would you guys sell if you're open long MGM like I am? And here's a quick tip I want to give you before we get underway this morning is you can usually gauge what I've worked with thousands of traders over the years. I can usually tell how successful or not a trader is by how small, how teeny tiny their stops are and how close they take the profit out of a trade. You know, how tight are your stops? The tighter the stops, the more successful the trader is, a general rule of thumb. The worst traders, the guys are going to give it, well, I'll give it all the way down to 19. Epic fail. You would not do that. Just have my laugh track going here. But I'm going to sell it if it gets down no lower than 22.50, right under 23. And the reason for that is shooting star, right? Shooting star is telling me that buyers are running out of steam under 23.5. So I'm going to sell my MGM if it gets right under 22.50. That's my scale out for open swing. Okay, so that's just me. I like to keep things reasonably tight because when I'm in the money in a trade, I want to keep as much of it as I can. That's how I trade. You know, it's your goal is to make money trading. So the only way to do that is to take the money before the market takes it back. So anyway, I hope that a lot of comments here. 22.25, 23, 25, 22.7. That's good. Those are all fine. Those are all smart. Y'all are in the ballpark. Somewhere over 22. Is fine to tighten in a trailing stop. I'm long from much earlier. This thing's been running up all year long for me, but I want to sell now. Yeah, point or so. Shooting star up here now. It may well drop back down to 20. May keep running up. I don't predict. It just reacts. So anyway, the shooting star is enough to tell me to get out at the first sign of trouble. Anyway. I hope that you all are having a fantastic holiday season. This is Ken Calhoun, the original Day Trading University, president of Trade Mastery, Swing Trading University, E-mini University, Breakout Mastery, ETF Mastery, many, many other sites. Anyway, we get underway here in just about a minute. I wanted to welcome everybody here on behalf of all of us here at Team Day Trading University as we get underway. Let me put this out of the way for just a second, and we'll get started right here, right now. Hey, welcome traders to Trading Week Ahead. This is Ken Calhoun, your host, coming at you live from Colorado Springs, Colorado in the US of A, here on December 28th. We got just a few days left. I hope you all are having a fantastic holiday season, that friends and family and gifts. The market's been good to us with the Santa Claus rally this last week, so we'll see if that's able to continue on into next week. We'll see what's worth trading. As always, all information is for educational use only. No advice or recommendations about what to buy, sell, or hold are being provided. By watching this, you hereby agree not to make any actual trades. This is all for information. Hey, certainly appreciate it if you would tell a friend and let folks know about these. With now over 2,500 people registered, this has got to be the record for our trading webinars. So I wanted to thank everybody for making these a hit. We are currently up to, actually, I'm logged into my GoToWebinar for proof that it's not Photoshop, but I'm actually in my admin area. Okay, 2,512 people registered. So that's got to be some kind of epic win for the trading industry. Thanks to everybody for making these a part of your Saturday. Hey, a quick admin note. Effective next year, effective January 1st, we're going to be tightening the time on these down to 20 minutes. So I've been doing these for over a year and a half now, and they're the industry's top attended or most popular ongoing webinar series, at least that I've seen. Most people only get a tenth of that, if that many. Anyway, I'm going to be tightening in the time to 10:20, so they're going to be relatively quick. Okay, one of the things that I promised y'all in the email today is how to trade year-end breakouts. And we're going to look at two-step breakouts, candle and cup momentum breaks, secondary entries and exits. And I'm going to cover that in just a few minutes at the end of tonight's broadcast, or this morning's broadcast. But let's go ahead and jump right into it and take a look at our broad market. Hey, everybody. Great to see so many of you here this morning. It's nice to see a big turnout. The S&P has been moving up strongly. If you remember, one of the favorite patterns that I've published and taught people about for many years is the wide range candles at the right side of a bullish cup. Right? You see a bullish cup, wide range candle. What I see here, though, is some uncertainty. So the S&P looks like it's going to have a tough time getting over 1850, possibly. I'm not saying that's not necessarily, but with the fact that the whole real bodies are getting sequentially smaller in the S&P, whatever you're trading, if the whole real bodies, the candles, the real bodies are getting smaller and smaller, that tells you that buyers are running out of momentum or out of conviction. So you want to tighten in trailing stops. I'm going to use 1832 as S1, tighten this in. 1832 is support 1, and it's right under this window or this gap. Okay, that makes sense. 1832 is a good place. Conservative, tight reason to get out of the market or go cash if we get under 1832. And for a long bias, we're going to use just over 1850. Okay, so 1832 is the support. If it loses that, at least I'm going to start selling out of my open long swing trading positions. If we get over the 1850 and hold above that, then I'll initiate new positions. Or in my case, I'll scale in or add to existing open long swings. So that's our S&P forecast for the upcoming week ahead. For those of you who are new, we like to look at the swing trading charts, our day trading charts, gaps. We also look at our ETFs, our E-minis, and our Forex charts. So we cover multiple markets in these. And we will be making these more abbreviated next year. I've got a huge turnout, so thanks to hundreds of you here. We're going to make these 20 minutes effective 2014. So this is the last 30-minute broadcast. We're going to be tightening in the time. So I know you folks are busy, as am I, so we're going to keep it fast, hit the ground running, and see where these things are moving. The two best steel instruments, AKS, for those who trade cheap instruments. Some people out there looking at aluminum, wrong. Epic fail. Steel is the story. The two best instruments I like are AKS, and I trade US Steel, X, the ticker. And what I like about both of these, a very strong uptrend continuation. So from a sector or commodity standpoint, keep an eye on steel. An unlikely one, right? Typically we trade oil and gold, but and pharmaceutical stocks, some sectors, but steel, an unlikely yet very strong recent sector. So keep an eye on X and AKS, AK Steel Holding Corp. Those are the two best of the steel-related stocks I can find for you guys. Also, LVLT, that's another one of my picks for the week ahead. I like the fact this is level 3 communications. We have a bullish cup uptrend continuation. I like the fact that it's right under 33. If we're able to punch out over 33.5, maybe worth a shot. So keep an eye on LVLT for the week ahead as well. We've got two more stocks for swings, then we'll look at gaps, ETFs, and more. The next one is Mattel. Met didn't look too bad either, right? MET, but it was a typo. I like MAT, Mattel. A quick tip, when it comes to continuation breakout trades, one of the things that I have found serves me well, I make my biggest winning trades is when I trade multi-day continuation breakouts. That's how I trade. I specialize in trading the upper right side of the chart, as should we all. You can see that Mattel, makers of fine toys everywhere, has gone from 45.70 up to just under 47. So we have a 2.5-point run on a $40 stock. Not reasonably good. What I like best about it, though, is we have an inverse head and shoulders pattern. Left shoulder, big head, right shoulder. We've got a major 15-day high new cup. Not as strong as a good continuation trend, but we do have a bullish cup breakout. And when you look at the daily chart, we're up at 90-day highs as well in Mattel. So keep an eye on MAT for the upcoming week ahead as well. That's a reasonably strong chart. The last of our swing charts is VISN, and that is Vision China Media. Whatever that is. I just trade them. I don't know what the companies are. Minor gap continuations. As I taught so many hundreds of you in my How to Trade Gaps training, we always look for minor gaps that continue to run on up. That's how I trade. Anyway, you can see this one is no exception. VISN gapped from just under 19 to just over 19, and then gapped again from 24.25 up to 26, and now it's at 31. Look at that 2-day chart, 20 to 30. This is a dangerous chart for new traders, so this is not one for inexperienced traders because of volatility. It's a 10-point runner on a $30 instrument, so that's very high volatility. But if you're a professional trader, you're always looking for the biggest money plays. High volume, high volatility, the two V's. Two V's, always looking for volume and volatility. So keep an eye on VISN and see if that's able to take out new highs. I like the fact that we've got 15-day high volume continuation price action in this. It's gone from 10 to 30, a triple, in just 3 weeks. Now these are the kind that I like to, when I trade these, I like to trade very small size, because if it goes 5 points against me, I don't want that to cost me 500 bucks. I want it to cost me 50 or 80 or 100 bucks. I want to keep it tight. When it runs up, I can always scale in and play with the house's money for uptrend continuation plays. So VISN. So in summary, AKS and X, those are the two steel plays. Level 3, LVLT, that's a nice uptrend continuation. Mattel, nice cut breakout. And VISN, kind of a nice combination of different breakout patterns to trade. Now here's a quick tip for you. Now, one of the things that I wanted to cover for you in our strategy points, two-step breakouts. One of the things that I like to do is trade the first major cup on a 90-day chart. A two-step breakout is typically, you see, a major 90-day cup pattern. You buy 50 cents or so above the high of the cup. What you then look for is a new wide range candle if it's able to pierce the current resistance level. So for example, I want to see a wide range candle. By wide range, how do you define that, Ken? Well, I mean something that's at least twice the whole real body of the previous 2 or 3 candles. So here you can see that's only got a 40 or 50 cent at most candle. So I want to see at least a 1-point candle on the right side of a cup pattern, and then I'll scale in or add to my open winning long trade. Okay. If you're looking at some of these other charts, let's see some of the very strongest ones. Here's that VISN chart. You can see a wide range candle. See how this is wide? It's at least twice the height of the whole real body of the previous 2 at the right side of a cup. That's good. It doubled on from there, right? It went from 8 to, well, the height of the whole real body's doubled on each of the 2 days after that. So add-on trades, you know, if you're not in the trade already, you wait until it breaks 50 cents above the high. If you're in the trade, you wait until it breaks to at least 2 points to scale in for swings on a new high continuation. So let's take a look at U.S. Steel here on the daily. You can see a bullish cup pattern in a wide range candle. See, classic Calhoun wide range candle at the right side of a cup. That's my, you could see the, where's the link to that? The Traders Expo, you can see my presentation. Thanks to the folks at Money Show for making that possible. Anyway, you can see me talk about wide range candle breakouts. A two-step is to add to a winning trade, say 2 points or so. When I position size or scale into an open winning long, I like to use 2 points above my initial entry to scale in. So trade 1, say 50 cents above the high. Trade 2 is another couple of points up. So that's my two-step breakout process. We'll look at other candle and cup momentum breaks and secondary entries in just a minute. But that's something to get started with in terms of your own trading approach. Now, let's take a look at our social media stocks, and we're going to look at these in context of gaps. Okay. What I like about this is one of the strongest patterns you can identify is an engulfing gap, or I should say, in this case, we have a minor gap that continued up, right? We have a minor gap, continued up, minor gap, continued up, minor gap, continued up. So 3 times in a row, Facebook has done a gap up continuation, but the reversal following a gap is identified by, say, it's like a bearish engulfing pattern, but just on the last half hour or hour of that particular chart. If it starts from above the trading range, okay, it starts up here and then breaks down under it, that's a good short signal, or get out of open longs if you're long signal. So if previous day is here and current day starts up here, like you can see on that Facebook chart, previous day on Christmas Eve on the 24th, and then the day after it opened here and then moved down, that's a good place to close out an open swing or initiate a new short. So that's a reversal play on gaps. I typically just buy new gap highs, right? Minor gaps that continue to run on up, usually good for swings. So Facebook, really good example of that. The other one, and I'm looking for new plays in Twitter. This is one that I like to trade Twitter. I've been trading Twitter this last couple of weeks, and the reason is the volatility has been outstanding. You see a 2-day low pattern here. This is a good place to get out of any open long. Earliest recovery long. Let's see, where would I buy this again? For a day trade, I'll be looking at it over 66. For a swing trade, I want it to get well over 70. So I have more stringent criteria, or more, how to say, I'm more of a skeptic to buy a counter trend reversal than I am to just go short on a new low. Okay, I'd rather just short this out and say 62.80 or so, right? That would be a likely short trigger 1 and a short trigger 2 around 59.40. Okay, at least my own account. So I'd much rather just short Twitter on a gap continuation. Now, frequently what you find is if you have a 2-day pattern like this, a 2-day cycle, we have a bearish cup. This is not quite a head and shoulders breakdown. It's just a straight 2-day low breakdown continuation. You often find a gap, either an inside gap up or a minor gap down. That's the better play to short it on a continuation move down. So for gap charts, you can see that these, every time we've done minor gaps, they've continued to move on up. Minor gap up, continues to move up. Minor gap up, ran up, 8 points before going. Now a gap down, sold down. Be on the lookout, especially important for year-end trading, in minor gap continuations. It doesn't have to gap outside of the previous day's range, which is the classic gap definition. What I specialize in, how I trade, is I look for minor gaps. It's a story of what the most likely price action is going to do on the right side of the chart. So if something closes here and it opens up slightly higher, 20, 30, 50 cents up, I'll buy a new high in that. If it breaks down, if I'm open swing long, I'll close out the trade or initiate flip to short for a day trade. So either way, you're covered. And you want to be very careful about how you trade your gaps and make sure you're on the right side of the trade, especially important for our year-end trading markets. Now, let's see, for ETFs, the two that I like best are USO, that's an oil ETN or ETF, and you can see it's up here, minor gaps continued on up. It's perched up here at 15-day highs. If you look on the daily chart, what does this tell you? You don't want to go long, and or at least I don't want to go long, unless it breaks well above that 100 moving average. So unless we break above 36.40 or so in USO, I don't want to buy it. So again, that's roughly 40, 50 cents above the current high, which makes sense. For a reversal play, if the market collapses and continues to sell on down, like you could see in our broad market chart, these will bounce. All the inverse or ETFs, like TZA, and that's my other favorite for a counter trend trade. If TZA gets over 1740, 1750, I'll look to go in long on that, because this is a downtrend but a 2-day uptrend continuation. So that's a reversal of trend, right? It had peaked at 20 and sold down to 17. If it gets back over 17.5 or so, I'll go long in TZA. So keep an eye on that one for the week ahead as well. That's a hedge play or an arbitrage or counter play. If the market collapses, these bear ETFs go up. And that's what I like to trade. The market sells. So far, market's still strong, but if we do get a bounce in these, they're well worth looking at because the market may sell down, in which case this will rapidly fill its previous sell-off range. So that's another good one to take a look at. Again, I like to just buy new things that are up at new highs that are continuing on up. So keep an eye on those type of instruments in the week ahead. Okay, now let's change gears and take a look at our E-minis for our ES traders out there. Here is our E-mini S&P. It's a 3-day chart. Didn't have any data back on Christmas Day, of course, but you can see a 2-day trend here. What am I using? 1842.75, so reasonably conservative on a breakout long continuation. I'm a bit of a skeptic right here, to be honest, so I'm using 1842.75. Almost 3 handles, almost 3 whole points up above the 1840. So 1842.75 is R1 for the ES for next week. That's my official call. And my official short call is 1832 1/4. I want to see at least a couple of handles of selling pressure. I don't want to wait for it to get at the low, but I will start to sell right there. Go short at 1832 1/4. So just a tick over the 1832 for a sell bias for the ES for the week ahead as well. You guys know how well these work out, right? So thanks for making these a hit. Let's take a look now at our Forex charts, and we'll see what's in play for those. The yen has been weak, right? Everything trading against the Japanese yen has done exceptionally well. My favorite chart, my #1 chart pick for the week ahead is the US dollar to the Japan yen. You can see we've got a classic series of cup pattern breakouts, right? As a trader, you have my word, it's extremely important that you learn how to focus on the simplest, strongest, widest range cups, and the very most effective patterns that are most likely to keep going based on relative strength and comparing. Kind of like with Disney, how they did those the onion skin animation, as the, the classic. For those of you who know animation work, the classic change things a frame at a time. Well, as you click through your charts, your goal is to see which of these is telling you a story of the best emerging relative strength. Not so much what's moved before. That's a good early indicator. But the main thing I care about, the only way I get paid as a trader, is if I'm right buying in the upper right side of the chart and then selling to someone else at an even higher price, right? That's what I do. I trade. So I might buy 105.3 and sell 107, right, for a swing trade. I might scalp at 105.31, sell 105.38, whatever that is. Keep an eye on these for the week ahead. The U.S. dollar to Japan yen, you can see every time it's done a cup breakout, it's held support and moved on up to new highs. Okay, so for our U.S. dollar to Japan yen, 105 is rich. That's a good high level for the dollar yen. It's 3-month highs and 1-year highs. We have officially hit the 1-year high in the dollar against the Japan yen. So this is a really good time to be looking at it. I always like to give preference to new 1-year highs and lows, right? 52-week highs and lows in both your currency charts as well as your equity and ETF charts are one of the strongest institutional buy and sell signals, in this case a buy signal, that's most likely to attract new institutional money flow. Pardon me, I like my coffee. So sue me. Anyway, so the dollar yen, also the euro yen and the pound yen, a pullback here in the euro yen, so that makes it not quite as strong as the dollar yen, but I like the strength of this chart, right? This is a very strong bullish uptrend continuation chart in the euro against the Japan yen, as well as our British pound to the Japan yen. You can see the pound yen also very obvious cup patterns, right? Here's a cup that attracts new highs, finds support. If you're a pullback bounce trader, always look for these cups. The trick is use this many days of data to evaluate the trading strength of that particular chart pattern. Okay, if you were to just say use a 6 or 7 day chart, you wouldn't have seen this anchor point. Okay, that's why I use 3, 6, 9, 12 days on my Forex charts, and I use 15 days on my stock charts. Those I find are the optimum for setting up correct winning swing trades for these kind of patterns. For day trades too, you always just buy or scalp in right at breakouts just above previous highs with the false breakout avoidance filter, which I teach in my premium courses, up at the new high. Anyway, you can see here the British pound and the Japan yen also good. And last but not least, our Euro CAD. If you look at that chart, what I like about this one is it's not as strong as the yen charts, but it did at least poke its head up above previous cup pattern highs. So the euro's been strong lately, most notably against the Japan yen, but also against the Canadian dollar. So we're up at, poked its head above new highs. We'll see if that's able to get lift or get institutional buy pressure in the week ahead. But my single best chart that I see out there is the dollar yen. That's the strongest uptrend continuation chart out there in the currency world. So again, it's not, you don't buy it right now, but let's see what it does coming up in the immediate future over the next few days and see if it's able to continue its merry path on to new highs. Now let's take a look. Let me see. Oh yeah, I promised before we get into more training, the Transform Your Trading is currently the discount code that's good for 24 hours only is Get 50. Kind of like that great movie with Danny DeVito called Get Shorty, but this is Get 50. Get $50 off. It's $197. Transform Your Trading. Many of you have already bought that earlier with an even bigger discount. The later you wait, the smaller the discount gets, but it's still a big, healthy discount. You get it's over 3 hours and 40 minutes of videos plus an upcoming webinar with me coming up January 28th. You get the download to that too, and so it's only $147. So that's cheap, right? You get a total of over 4.5, well over 4.5 hours with me personally for $150. So that's a great deal. Anyway, Transform Your Trading. What you do is just type in Get 50. You type in GET50 and click Apply, and that will drop the price all the way from $197 down to $147. So that's the cheapest it's going to be moving forward. So that's right now is a good time to get it. This coupon code expires tomorrow. Okay, so it's good for 24 hours. Another good reason to be here in the Saturday events. I will continue to have these specials weekly, but you have to be here live to get the code. I'm not going to email it out, and I appreciate if you don't share it everywhere out there on the internet and all the different trading forums and Twitter and all that. Don't do that. Just keep it private. Actually, I guess I wouldn't mind if you do that, but it's like to request that you keep it private. So that's good for that. The other thing that I wanted to announce, I only do this once a year, and this is only good for 24 hours. My award-winning online trading course, and this is for stock and ETF day traders. Okay, not for Forex, not for E-minis, not for crude, not for some of these other instruments or spread betting in the UK, none of that crap. It's for day trading stocks. I'm the go-to guy for that. You can see lots of testimonials. The main link is here, but I put together here's the quick. That'll redirect. I do a lot of redirects, so that way you don't have to remember all this. It's daytradinguniversity.com/course. If you enter that, that'll take you to the course. And in this one, it's my deal of the year for the online course. This one, you get a full $300 off if you enter the code WINBIG. Okay. Always have fun trying to come up with neat-sounding coupon names that aren't easy to guess, but sound fun and easy to remember. So if you click on that, what I want you to do is go to the online course, click on Add to Cart. Okay. Once you do that, you'll get over to the order page. It'll say $7.95. Enter WINBIG. Click Apply, and that'll drop the price all the way down to $4.95. Okay. You're probably familiar with this if you've been anywhere online for any length of time. It's got over 10 hours, even more lately. I just added 2 new videos on the 20th, on December 20th, on exceptional moves, wider than average plays, and also on how to trade using daily trading ranges with the 1-minute chart. We're looking at 3D in that, so DDD is the ticker. Anyway, post updated movies. They're usually anywhere from, say, 5 to 12 or 15 minutes, and I post new movies every 2, 3, 4 months. So you've got new videos. You get access for a full year and a half. Okay, you get 18 months of access, and there's no recurring fees and no monthly fees or anything. It's just one time, $4.97, and you're in for a year and a half with my award-winning online course. And it did get the Best of the Net award for quite a few years, and you can see over 100 testimonials and all the rest of it, and screen caps of all the last couple of years worth of recent movies. Now, one of the things that I endeavor to do in my courses is make sure that there's minimal overlap, that everything is new and different, so that you don't buy one of my courses and buy another one and say, well, there's a lot of the same stuff in that. Unlike other people in the trading industry, I'm a professional trainer as well as trader, and I like to make sure that everything has minimal overlap. It's enough to relate to each other, but the strategies are all updated, they're different, they add to what you've already learned from me. and that's why I get so many repeat customers, and many of you, and thanks very much to all of you who buy 5, 6, 8, or 10 of my courses. You know that they're good, and they all build on, like any good university, it's like different courses that build a curriculum that all stands together on itself, right, on its own two legs. So anyway, really excited about this offer. Remember, don't click checkout unless you see $4.95. So it'll, if I walk you through it here, if you click on add to cart, okay, if you click on add to cart, it'll look at $7.95. Just type in either lower, bigger, upper or lowercase, type in win big, and then what I want you to do is click the apply, left click the apply button. Okay, and there, okay, there it goes. You can see it'll say $4.95. So anyway, I double entered it back here. Anyway, and so you'll get the price all the way down to $4.95. You have my word, it's a very good course. It also includes my classic day trading course that I developed back in 2000, 2001, 2002 for reference, for archival purpose. It's got all kinds of PowerPoints and downloadable worksheets and lots of pages of things to learn from, in addition to all the new videos that I've recorded for you guys. So it's over 45 downloadable videos. They're nowhere else other than this course, right? This is exclusive content in the course, and as a real trader with proof I trade, you have my word, it's a really, really good deal. It's going to be $300 off, but only for the next 24 hours, okay? And I'm not going to repeat that deal, at least not till a year from now, so now's the right time to get this. So go ahead and register now if you're not already a live, online course member. Okay, so that's daytradinguniversity.com/course. So that's our holiday deals. The last one is, if you want my live trading room, 15 hours of training each month, right? And that's at tradingtheopen.com/holiday for my live room. You can see examples of the videos that I've recorded, which you guys get as part of the live room. So if you're a day trader and you want to learn live, also consider my live trading room. All right. We'll look for wide range cups, and I'll usually buy 50 cents or so above the height of that candle. So I don't buy yet, and odds are you're not going to see this candle as it's forming intraday anyway, but you come home and you see, hey, it's one of those Calhoun breakout cups, you put in a trigger 50 cents or so above the high, you'll be right as rain. It's a good pattern. It's simple, right? Very easy to remember, and it's very effective, right? The trick is you need to know the difference between false breakouts and the best breakouts that are most likely to run. And I exclusively teach how to do that in my paid courses. So I'm giving you a lot of good free stuff, right? But to implement and actually use it, you need to invest in my live trading room or my online course or some of my other resources. So that's fair. I give you a lot of good actionable things you can start using regardless, which I'm a big fan of. See, look at this. Cup pattern. So here's one that's in play. Cliff's Resources, CLF. That almost made the list for this week, because the daily chart's a nice cup breakout. But on the daily, the swing trading chart, the daily chart, you can see here, it's got one of those wide range candles, wide range candle at the right side of a cup. I'll look at this at over 27, right? So I'll add 50 cents or so above that high and see if CLF's able to take out new highs. So this is a good example of a candle and cup momentum break. You're looking for those type of patterns. Very easy. You don't need any special software to do that. All you need is, your eyes, right? Secondary entries and exits, just as a general rule of thumb, usually 2 points above each sequential new high is usually a good place to look at. So if I buy here, let's say I buy right over 27. Right over 29 might be a good place, but one of the things I teach is 9s usually aren't good, so I might wait a little more conservatively till it breaks 30. Okay. U.S. Steel, an even better chart, and that was one of our picks. You can see the shooting star sure enough did attract new sellers. The hammer attracted buyers, and another hammer here got buyers. That's not a hammer, but that one and this one at new lows. Shooting star sold down. Hammer got buyers. Shooting star down. Hammer up. Wide range candle at right side of Calhoun Cup breakout, and you can see this thing runs on up to 30. So this is a good play, and that's why U.S. Steel, or X, the ticker, made the cut for the upcoming week ahead as well. I don't want to buy it yet, but if it gets up, say, over 30.5, 30.7, yeah, I'll start off a new swing trade. So anyways, I hope this has been helpful. Be strong out there. Do well. I hope you guys are making a lot of money trading, or at least not losing much. And as you learn how to trade more professionally, I hope that this thought process that I'm sharing with you helps put you on the right side of your trades, so you can get bigger winners more often is the goal, right? So anyway, I have got a in 30 minutes I've got the bonus event. Oh yeah, that's right. I forgot the cash charts for my live room members. Would be remiss if I did not put those in. This is something, by the way, for those of you who are new, is I will put in tickers for, and I cover up the name, so the identity of these are only available to my live room members. The tickers are in the tradingtheopen.com/members area. So if you're a member, keep an eye on these. This is cash chart number 1 for my Trading the Open members. The identities in the members area. So once you join, you can log in and take a look at the ticker for this one. This is one of the very best charts out there because it's got a near 3-week uptrend continuation. Here is number 2. Okay, number 2 from 45 to 48. I like the fact that the gaps continue to cycle on up to new highs. Okay, so it behaves itself when it takes out new highs in its gaps. Here's chart number 3. This is another gap continuation runner. Minor gaps, remember, gaps usually continue on up in the trend of the gap. They seldom fade. You can see this one did a 1, 2, 3. It moved up, ran up, pulled back. You can see articles at equities.com I wrote on the 1, 2, 3 pattern, and that worked out really nicely as well. So that is chart number 3. Here's chart number 4. Okay, this one's a nice steady uptrend continuation, nice 45-degree breakout runner, a nice cup continuation, attracted new buyers all the way from 28 to 31, so kind of a bunny slope, but a nice steady chart. And the last but not least one, number 5, is this one. What I like is the sharp angle breakout. This is what I call a acceleration ramp. It goes steady trend, then a sharp kind of a hockey stick or check mark breakout on the right side of the chart. This is chart number 5. So for my live room members, you can log in and get the identity of that chart and look at that for the week ahead as well. So those are bonus charts for my live room members. Anyway, our S&P looks like this, and we'll see if we're able to attract new buyers over 1850 in the week ahead as well. Anyway, thanks so much for being here. I genuinely appreciate it. It's great to see so many of you here at 2,512. Let's see if we get more. 2517. Okay, so 2,517 people have registered for these. So it's great to see so many people registered, and to my knowledge, it's the best attended, best registered ongoing series of webinars in the entire trading industry. Hope you guys have a safe and happy new year ahead. It's great to see the popularity as our business continues to grow. We've been migrating a lot of the sites over to faster servers, and we've been investing in infrastructure so we can provide even faster delivery of our websites and our video content and the rest of it to all of you out there. So on behalf of all of us here at Day Trading University, swingtradinguniversity.com, trademastery.com, and the rest of my sites, I wanted to thank you for being part of what I'm trying to accomplish here. Thanks so much. Now let's see, too, if there's any questions. Oh, no, thanks. Kate saying Twitter was spot on last Saturday. Yeah, hey, you're welcome. Just be cautious with those because right now our social media, the Twitter and Facebook, is starting to show some weakness. So from last week it ran up, and now it's starting to misbehave and come back down, so good time to get out if it continues its downtrend. At least that's what I'm going to do. I'm long Twitter myself, and I'm going to sell it if no further down than, say, 60, 62. Right, but looks like it's in trouble. So breakpoint 1, breakpoint 2 for sells. Rebuy if it finds support here, maybe a hammer and starts to bounce. Right, so we'll see what it does. Let's see a question. Let's see. Now I don't have too much time left because I've got a upcoming bonus webinar for my Trading the Open members that. Every last Saturday of each month. By the way, let me just repeat these offers real quick. And then, everything's all sold separately and all that. The Transform Your Trading offer code is GET50. Okay, so coupon, if you haven't already gotten that, make sure you get that. And also, this is a really good time, the one time of the year that I offer my online course, and I'm not even sending out an email. I'm going to cut down on my emails next year too. I'm going to try and send out less, but in each email I will put more things in it. So that way I don't burden you guys with too many emails. I want to be a welcome guest, not a pest in your email inbox. I want to keep the emails to a couple a week, and so I'll be putting multiple offers in those, or multiple content with new articles or whatnot. So those are my 3 offers for the week. Usually I'll just do one, but this time, because it's the end of the year and it's a good time to lock in your gains before, so you could write this stuff off for taxes possibly. You have to check with your CPA, but this is a good time to get these purchases done before the year end in just a few days. So today's the 28th. These coupon codes are only good today. They expire in 24 hours. So make sure to go ahead and place your order today, or at least bookmark the site and think about it and put your order in this afternoon. And be sure you get your order in before midnight tonight. All right, let's see what else. Question from, hey, thanks, Arturo, saying I wish you and your family holidays, personal success, peace of mind. Yes, peace of mind, the most important thing one gets. I appreciate that. Thanks, Arturo. And right from Ken about FAS. What I will do is I will arb trade, or I will pair trade FAS. I trade FAS, which is the long triple financial ETF, against the bear one, FAZ. So they have the exact inverse pattern. So as one goes up, the other goes down. And so FAS versus FAZ, TZA versus TNA, right? They have exactly mirror image patterns. And I teach how to trade those in my ETF courses. But yeah, you're right. Yeah, good call. A question from Sterling about how to scale out. I teach that in my momentumdoubler.com course. But typically I will scale out every 1.5 or so. I use P&L based stops. So if I'm in the money, say $800 in the trade, I'm going to likely sell it all if it gets down to 700 or even 725 or so. So I use the dollar cost of how much I'm in the trade in the money, or if I'm out of the money. If I'm, say, a stop loss and I'm, say, $80 in the red, I'm going to stop out if it gets to, say, $95 or $100. So I use dollar-based as well as technical stops, and I teach that in my courses. But yeah, it's a good question. From Kate, my favorite trades are always the 2-day high continuation breakouts. Yeah, good question. Hey, you're welcome, everyone. Appreciate that. And right, from B, the day trading course is online, recorded, not live. The Trading Open is live. That's correct. From Tim, the 147 special, that is at transformyourtrading.com, and when you order that, where is that one? Transform Your Trading, you just type in get 50, and that'll drop it down